Keep taking the stimulus. The Bank of Japan doubles its loan program as doubts creep in about Abenomics. And where John Lennon lives on as a carnival mask. Japanese shares surging and the yen falls after the Bank of Japan doubles loan programs aimed at stimulating bank lending and economic growth. It comes a day after weak growth figures cast doubts on whether the massive stimulus known as Abenomics is actually working. Also heard from Bank of Japan Governor Kuroda this morning. Let's get to Craig Erland, market analyst at Alpari. Morning to you, Craig. Has Abenomics run its course?
Well, I think it'd be maybe a little bit unfair to say it's run its course. I mean, we're still underway in what's going to be a massive programme, which I think most people anticipated would take a few years. We are seeing some inflation, which was the key reason behind Abenomics. But what we've just seen is we've hit a bit of a stumbling block. We saw growth in the fourth quarter, much lower than we were expecting, only 0.3% on a quarterly basis. On an annualised basis, that's only 1%, much lower than the 2.8% figure. And I think what we've seen this morning with the increase in this lending scheme, doubling one of the schemes to 7 trillion yen and extending both by an additional year, just shows that the Bank of Japan is willing to be reactive to how the economy is reacting to its massive fiscal and monetary stimulus program. And we can't really be too surprised about this. I think people were expecting it to maybe wait till April and then increase its asset purchases, which it may still do once the sales tax hike comes into place.
Right.
But I think it is a positive thing that they are willing to react.
So does it change the Japan trade for you? Does it change the yen trade for you?
No, I think the yen is still going to look weak, and I think what we've seen recently with the yen strengthening against the dollar has just been a correction more so than actual yen strength. I think people were just effectively waiting for that next bout of stimulus, and like I said, we were expecting it to be in the form of increased asset purchases, and this morning instead we've seen a reaction to the increase in this lending scheme.
All right, jumping to this side of the world, there's a lot of UK data out this week. I want to talk a little bit about that. We've got inflation data today. Bank of England minutes tomorrow. I think we've got retail sales as well this week. What are you looking for, and how's Carney going to view this?
Well, I think looking at today, we've got the inflation figures, and I think we're expecting it to stay in line with last month's at 2%, which is a real positive for the UK because it really eases the pressure on the Bank of England to start hiking interest rates, which is something that could potentially choke off what recovery we have seen. And it also continues to close that gap between the inflation rate and the cost and people's wage growth. So I think if we can see it remain around that 2%, it'll be a positive sign. Retail sales on Friday, we're expecting a drop of 0.9%, but when you consider how big the jump in retail sales was in December, that's not necessarily too much of a negative sign. I think what we're really looking for in the minutes tomorrow is to see what the policy makers really see with the UK, what they see as the course for future monetary policy, and how many dissenting voices there were. Of course, when we're looking at the Bank of England, we're regularly looking at those dissenting voices, of which there's been many in the past, and this could give some key clues as to how long we can continue to see these record low interest rates and when we can potentially factor in that first interest rate hike, which some people see as being only later on this year.
All right, thanks a lot, Craig. In corporate news, BHP Billiton tops market forecast with a 31% rise in first half profit. The miner hints it may launch a share buyback in August, despite a cautious outlook on Chinese growth. Drug maker Actavis is in talks to buy rival Forest Labs for around $25 billion. That's according to the Wall Street Journal, which cites people familiar with those discussions. The combined company would compete with the likes of Teva in generic drugs as well as in branded medicines. Profits rose more than 10% at the world's largest hotelier, Intercontinental. Occupancy rates and revenue per available room also rose strongly. Sources say the UK government wants to sell the majority of its next share offering of Lloyds Bank to institutional investors. The offering could come as early as March or April and may include a small portion for retail investors. In world news, riots at an Australian immigration detention centre in Papua New Guinea have left at least one person dead and scores injured. The incident followed an attempted breakout when 35 asylum seekers briefly escaped after being told their chances of resettlement elsewhere were bleak. One policeman has died and several others have been wounded on the streets of Bangkok as the authorities try to clear anti-government protesters. The protesters have been rallying since November to try and oust Prime Minister Yingluck Shinawatra. That is it for this morning. I'll leave you with our pick of the day. Just 2 weeks to go to the start of the Rio Carnival, and the mask makers are hard at work. One perennial favourite, perhaps surprisingly, is one that depicts former Beatle John Lennon. The biggest seller this year, Nelson Mandela, who died, of course, in December. That's it. I'm Axel Threlfall. This is Reuters.